Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Mullen Automotive, which is an electric vehicle company. We'll be going over their latest stock news updates, where the stock price is headed, if it's a buying opportunity, and what their future earnings are going to look like. Because remember, literally tomorrow they are going to release very intriguing financial results, and investors should be prepared for that. This author believes that the MULN stock is a buying opportunity. So let's see what he says. He says, Mullen Automotive, which is an electric vehicle company, ticker symbol MULN, could have a huge turnaround moment in store in 2023. Mullen, like we said, is an electric vehicle manufacturer, and right now, the macroeconomic conditions have not been favorable for Mullen Automotive, and so far, I 100% agree with this author. He goes on to say that Mullen Automotive shares were worth around $5 in the beginning of 2022, and then they have plummeted to less than 40 cents per share as of late, and I agree with that too. Currently, it's trading at around 27 cents, so clearly they have lost a lot of value in terms of their share price, and we'll get into why that is in a moment. However, this author believes that they will have a huge rebound comeback in 2023. He says that it's hard to know for sure, but he believes there is evidence that Mullen Automotive could generate fantastic growth throughout the year of 2023 in the commercial vehicle market. He cites one great catalyst, which is their partnership and their commercial deal with Randy Marion Automotive Group, which is, according to this article, a very big deal, considering that they're one of the largest and most respected commercial vehicle dealer groups in the United States. A particular division of this company has agreed to purchase around 6,000 of Mullen Automotive's Class 1 EV cargo vans. So Mullen's deal with this company is worth close to $200 million. So we're talking about a large revenue source for Mullen Automotive. But now the question is, can they manufacture 6,000 vehicles, and when does this commercial partnership end? Well, right now, Mullen has been focusing on landing a plethora of various partnerships, particularly partnerships that are more future-focused and not necessarily focused on the short term, which can be a good and bad thing. One of these partnerships would be a partnership with Loop Global. Essentially, these two companies, Loop Global and Mullen, are together going to operate business solutions and municipalities for residential EV drivers looking to deploy seamless and reliable EV charging stations. So this new service is going to be called Mullen EV Charging Network powered by Loop. So Mullen essentially is creating their own power charging network, which could be good and bad. Because clearly there's going to be upfront costs to doing this before these various stations and networks pay for themselves. So I'm actually concerned about where Mullen is going to find this money, and the author doesn't really say anything about that. He doesn't say how Mullen plans to actually fund any of this, if they're going to go into more debt. Right now, I don't think that their balance sheet is very liquid, so that's very interesting. However, if you're a bull when it comes to Mullen, I would highly recommend that you do your own research, because I'm just giving my opinion. I don't have any Mullen stock as of right now, and I would much rather wait for this company to prove themselves before I invest into this company. But that doesn't mean that the company is necessarily bad right now, it's just not necessarily my taste. But I do like how they are forward-looking, considering that they want fast charging stations and capabilities, as well as smart charging technology. So the author concludes that Mullen stock is a buying opportunity. However, Mullen investors are not necessarily sold, and they have very few positive catalysts as of late, despite the overall share price sinking lower every single day. He hopes that the deals with RMA and Loop Global will actually propel the MULN share price up over the next year, but in the meantime, shares are definitely a buy rating according to him, who is the author of this article. But he says not to over-allocate yourself to this company, and instead only allocate a small confident position in this company. So on average, for a healthy company, I like to allocate around a 5% allocation. So a small percent allocation to a company would be less than 1%. So even this author, who is very bullish on this company, is advocating, at least what I'm hearing, is to allocate less than 1% to this overall company. But here comes the bad news. If you remember in a previous video that we covered about Mullen Automotive, I said that they would miss their iGo delivery date, and that's that's going to act as a negative catalyst for this company. And guess what? That literally came true, considering that they missed their delivery date for this company, and the share price fell by around 18%. So let's discuss why they didn't deliver on time and how I knew that was most likely going to happen. Well, as you know, the share price is falling considering that they missed their delivery date for its iGo urban commercial electric delivery vehicle delivery to Newgate Motor Group, in which Newgate purchased around 500 vehicles per year, and according to the agreement, they would receive those vehicles around December 20th. And of course, they missed that delivery date. I was even giving them until later in December, but they still have not delivered on this particular promise. The reason why this is bad is we go back to Mullen's manufacturing capability. They're still trying to get their overall manufacturing plants so they can start mass producing their electric vehicles. But according to Newgate's homepage on their official website, it still displays that they are partnering with Mullen and that their vehicles are on the way due to their description, which says coming soon. So clearly it's not like the agreement is now completely dropped or it won't go through any longer, but it does definitely leave a bad taste in investors' mouth. So why exactly did Mullen miss their overall deadline? Well, ultimately no one really knows. The only people or company that can tell us what happened is Mullen themselves, and as of right now, they have not released any press releases as of yet to calm investors' nerves about why they missed this due date. But overall, I do think it's very speculative and very interesting that they missed this. It's only 500 vehicles, much lower than the 6,000 vehicles that were ordered from a previous company, and this does not give investors confidence that their overall manufacturing facilities are up to date, or at least up to par, to create these vehicles and deliver them on time. This means that Mullen is essentially over-promising and under-delivering, which is not good for a company at all. If anything, you would probably want to do the opposite. You would want to under-promise and over-deliver. Right now, Mullen is an exceedingly risky penny stock, trading for well under $1, but many investors believe that if they just invest $100 into this company, the risk-to-reward ratio could be good because this company could be worth a lot of money in the future, and they are technically correct. However, for me, I don't like putting any money into a company where the risk-to-reward is not in my favor. Essentially, I think investors are gambling with this particular company, and they're not investing. But Mullen clearly doesn't have either of these forecasts as of right now, and they're completely being outgunned and outmanned by a lot of other electric vehicle companies. Now, the good thing about Mullen Automotive is that they are landing a multitude of various partnerships and acquisitions. But acquiring companies, considering the current macroeconomic environment right now, is not a good idea. Right now, we want to identify companies with a strong balance sheet. So essentially, we want a company that has a lot of cash and or cash equivalents on their books so they can pay off any debts, or at least tread water, so to speak, until the overall economy recovers. This is why the overall share price is going to be very volatile, particularly tomorrow when Mullen unleashes their Q4 earnings preview and results. So what do investors actually expect from this? Well, many investors believe this is going to be a positive development, but of course I do not. This is a very risky company, and I don't have any money exposed to this company, but I'm reporting on it because you all want more updates on this particular stock. So when they release their Q4 earnings results, we essentially have two main options. Either this is going to act as a catalyst for the company's share price to temporarily surge and then fall back down, or if the company's overall share price is just going to fall because it's not going to meet expectations. However, if you've noticed, in both of these scenarios, the share price ultimately, over the long term, is going to drop during the year of 2023 unless something miraculous happens. So in the short term, I really wouldn't allocate too much money to this company, but even despite the company trading at 23 cents, many investors are still very bullish when it comes to this overall company. And clearly the reason for that is they believe the share price could absolutely explode. And again, that is possible. But considering that the company is facing somewhat of a liquidity crisis, which means they don't have a lot of money on their balance sheet where they could cover all of their overall expenses and debts, and they're also acquiring many companies, this low lowering their overall amount of money that they have, this is making this company an unnecessarily risky investment. I think by far, the smarter thing to do would be wait for this company to prove itself and then invest into it. Now, clearly that would be different if you plan to just trade this company, if you are a stock trader. However, I am not a stock trader. I like to invest into very solid, fundamental companies and hold for the long term, because that is how I have built my wealth over the last many years. So it really comes down to your risk strategy, what you think of this company. How much research have you done? Have you looked at their fundamentals, their current projections, their growth trajectory, what this company wants to make of itself, their manufacturing capacity, as well as their technology? Now, feel free to do whatever you think is best. Don't necessarily take my word for it, but just saying, over the past 6 previews and predictions that I've made about this company, they have all come true. But I would love to hear what your thoughts are about this company. Remember to go and smash that like button for more news updates on Mullen Stock. Subscribe, comment, smash the like button, and I will see you in the next YT video.